this panel, and I obviously would like to really also welcome you to this conference and to the panel on the future of personal income taxation. And also I'd like to extend my welcome to the panelists, whom I will shortly introduce to you. So, my name is Joost Korte. I am the Director General of DG Employment, Social Policies and Inclusion in the European Commission, and I was asked by my colleague and good friend Gerasimos to do him a favor to chair this panel, and I'm very happy to be able to do that, not least because obviously personal income taxation has a lot of relationships with labor market issues, with social security issues, so there's a lot of overlap between what we will discuss here this afternoon and what I'm doing in my office life. So I'm really honored to have with me today surely 5 highly distinguished panelists who I will now briefly introduce to you. I'll start by Mr. Markus FERBER, who has been serving as a member of the European Parliament since 1994 as part of the European People's Party, and he's currently the Vice Chair of the Subcommittee on Tax Matters of the European Parliament. So welcome, Mr. FERBER. Mrs. Paula DOURADO is a professor of tax law and international and European tax law at the University of Lisbon. She's also the director of the European Economic, Fiscal and Tax Research Center of the Law School of the University of Lisbon and the editor-in-chief of the international tax journal, Intertax, and the founding member of the Group for Research on European and International Taxation. The third person, Mr. Jyrki, KATAINEN, sitting next to me, a former Prime Minister of Finland, of course, also Finance Minister and member of the Finnish Parliament. He also served as Vice President of the European Commission in the previous mandate. Mr. President Juncker, responsible for jobs, growth, investment and competitiveness, and he's currently the Group Head of Public Affairs at Nordea Bank. Mrs. Cécile BROKELIND, Chairwoman of the European Association of Tax Law Professors. She's also the Program Director of a Master's Program in International and EU Tax Law at Lund University in Sweden. And last but not least, Mr. Camille LANDAIS. He's the Professor of Economics at the London School of Economics. In 2016, he was awarded the prize of the Best Young Economist of France for his research on the relationship between changes in inequality and fiscal and social policy. So again, very much related to the topics that we will discuss this afternoon. So you've seen from the program that today we will discuss about the role of taxation, in particular personal income taxation, in balancing incentives and redistribution. And the main issue I would like to dedicate the time that we have on is to see what we can do from the side of the European Union. This is an area where I think we don't have many hard competences, but still a lot of influence. What we can do to improve our taxation policies in the context of the megatrends. And let me cite a few of them. One which is very important in Europe is aging, but also globalization and digitalisation, all of which really risk undermining the tax base in Europe and also risk creating inequalities within our societies. The question is also highly relevant, of course, for the single market, where we will next year have 2 reports from distinguished ex-Prime Ministers of Italy, Mr. Letta and Mr. Draghi. And these questions go to the heart of I think also our competitiveness and long-term prosperity. And then finally, I think it's also very good at the time we are to give input to the Commission colleagues, because we are already, of course, preparing, like many others, for the next mandate. And maybe there are ideas coming from the conference today and tomorrow that are actually very useful to put forward to the policymakers for that new mandate of the European Commission. So that's in a way my introduction to give you a bit more clarity about the perspectives that we intend to pursue. In terms of organization, we have a bit more than 1 hour. I will give you also ample opportunity to ask questions, because I think that is makes the discussions a lot more lively and interesting. There will be, if possible, even 2 rounds of questions for you to ask, and I would really encourage you to use that opportunity. But before I start with the first round of questions from myself, I now hand the floor to the panelists for short introductory remarks. Each one of them, if they could limit themselves to 2 minutes, that would be very good. Who would like to start? Mr. KATAINEN, please.
Okay, thank you very much, Joost. Ladies and gentlemen, it's so nice to be back in Brussels for participating to Future of Europe debate. I would put it that way. So I tried to elaborate first why this topic is important for me, or why I'm interested in that. The reasons are twofold. First, I want to use taxation for boosting two biggest megatrends of our societies, namely green transition and data economy. And second reason is to ensure steady revenue flow for welfare society. In other terms, I would be happy if we could use taxation more for sustainable growth and jobs creation and equality and welfare. So in order to achieve these two targets or goals, we need to ensure that taxation of its part strengthen enterprises' capability to invest in green transition, which means that enterprises must be, or their economic position should be a kind which enables significant amount of additional new investments to green transition. Secondly, we need to ensure human capital to grow, which means to me that we have to use personal income taxation for increasing and incentivizing human capital growth. So it's quite obvious what are my two theses. I would not raise, I would rather lower income taxation, because I believe that those are good ways to incentivize both private investments and creation of human capital. But because we need more tax revenues, or some tax revenues also in the future, we have to look at other taxation opportunities. And their indirect taxes like VAT and behavioral taxes are the ones which I would concentrate more on. I understand that behavioral taxes are not good, because if they are accurate, they will destroy the tax base over the next few years. But at least we can win some more time for getting better economic environment. Finally, we have quite messy social security system here in the EU, because all the countries have created their own systems, and quite often taxes are using, or taxation is used for the purpose which is not the best possible for addressing social issues. So I believe that direct social subsidies and social services are quite often more efficient and meaningful ways to increase social justice.
Thank you very much. Next person for the short introduction, Paula, please.
Thank you. Is it on? Okay. So thank you for the invitation. Delighted to be here. And I will liaise to the previous panelist. I would be in agreement with him, but we should also remind that labor taxation plays a very important redistributive role also in the EU. And that's the challenge for us, how to get this mix. And I would go into the legal aspect, as I'm a lawyer. We know that under EU law, it's quite challenging to harmonize income taxation and labor income taxation. There's no harmonization in substance so far, although we know that there are procedural harmonized rules, for example, on exchange of information, and that's instrumental then to the member states. So the rule is that the allocation of taxing rights belongs to the member states, and until now, residents and non-residents, or residents and source, are the connecting rules. And this is also something that is challenging, taking into account the current mobility. We also have jurisprudence, settled jurisprudence, according to which residents and non-residents are not comparable in terms of individuals, and that's the point of departure. However, discriminatory taxation is forbidden. So we have some negative integration that means virtual residence, income-related deductions have to be granted by source, exit taxes are forbidden. Now, trailing taxes, for example, are not forbidden. So taking into account mobility, member states could use trailing taxes. We have a case, an old case by the Court of Justice that could orient us in this direction. So again, no harmonization. We would say that competences belong to the member states, but there could be control in terms of abuse. And the allocation of taxing rights to the member states would be the right option as long as it is exercised. So we could imagine that a subject to tax clause that exists under corporate income tax nowadays in terms of international taxation could in the future be applied also to personal income tax. Another possibility, taking into account the challenges created by mobility to the member states, is to introduce citizenship taxation. This could at the same time prevent abuse and increase legitimacy. And I would leave it to this point now, and later.
Thank you very much. Quite a number of quite provocative and innovative ideas. We hope to come back to those. Mr. FERBER, please.
Yeah, thank you very much, firstly, for the invitation and the possibility of speaking here, because I could make it very short and very easy. Oh, income tax, direct tax, look in the treaty, another European responsibility, full stop. And that is not what I'm going to do. Because honestly, when we discuss, for example, taxation of enterprises, corporate tax, for example, most of SMEs are taxed with income taxes. So therefore, we need to discuss it on European level when we want to create a level playing field for our enterprises. Only to mention one thing in addition to those things which have been said. And secondly, as we are responsible for indirect taxes, that's one of the major trends we have to think on, whether income taxes is the most important one, or the consumption of goods, or consumption of resources. And that is something we have discussed for decades. What is the better way of taxation? On the one hand, on a very simple method, you earn so much, a percentage of that is for the state, and that's it. There's a lot of possibilities. The member state I know best has a lot of ideas how to create a very complicated taxation system in the income tax area, but that's not the issue of today. But on the other hand, the consumption of resources could be very interesting as well, and in some areas we have it. We still wait for discussion on our side, Parliament side, but as well on the Council side on the Energy Tax Directive, which was a part of the Fit for 55 package and has not yet been touched, neither by us nor by the Council, and I think that is something we should look on. I'm not very happy that it is not yet discussed, and on the other hand, if you look to the emission trading system, it's a kind of taxation as well. The use of resources or the emission of CO2 in a negative sense. So therefore, I think we have to think on this strategy in general. Firstly, where do we want to go? And whether income taxation is the one and only possibility for balancing incentives and redistribution, or are there other tools, especially as I described in the area of consumption or using resources. And secondly, when we come to fair taxation on European level for our enterprises, we have to discuss income taxation as well.
Thank you.
Thank you very much. Thank you for this statement. When we were discussing and preparing this session before you today, there were three main questions which we agreed upon that I was going to touch as an introductory statement. And for me, these questions are quite central to answer the question whether, and if so, the EU should reform or should involve into harmonizing personal income tax, or at least shape the future of personal income tax until 2050. That's 25 years ahead from us. It's a long time. But first, the first thing I would like to address is there a point for this reform? So first, do we agree that tax bases do vanish? And for what reasons? Why? Why is it so? So first, everybody in academia, I'm also a law professor and very much into my books and reading what everybody is writing. First, it's quite obvious that automation technologies can have very various effects. One of those is a displacement effect of shifting a tax base from traditional labor income to another kind of labor income, for the worse or for the better. There are plenty of different studies showing up that, yeah, some tax bases are vanishing, but it's not that bad, because some other are created, which create even more higher tax bases. So digitalization, a threat to personal income taxation basis, question mark. Second, allocating taxing rights. Anna talked to you about this earlier, but as you may be aware of, states have bilateral agreements, and that's hard law. And for a lawyer, it's sacred. A hard law is a law which is binding. It's not a recommendation. Which effect does it have? It has the effect that you can go to court and bargain for your rights in front of a judge and get it done. So basically, what states have agreed upon is to allocate some taxing rights between each other. So there is nothing like that yet at the EU level. And what it means is that when you're mobile, you are confronted, as plenty of you probably in the rooms are, to multiple taxation. There are plenty of reasons why your labor income should be is exposed to hindrances. And the OECD has made everyone meeting at a table and signed a treaty a long time ago with a very specific rule on labor income, which gives the right to the states where the employer is deducting the economic cost of the work to be taxed. So if an employee is placed by his employer in another state than where he's a resident, then suddenly the place where the work is carried out has the priority order for taxation. What does it mean? It means that we live in a world where the residence of the employee still is the most important factor for allocating tax rights between member states. That may be a bit of Chinese, but in very, very simple terms, what it means that employees, and I mean labor work coming from an employment situation, not self-employment, not service rendering, employees under an employment relationship, when they obey their employer and go and work somewhere else, then they may, their state, lose tax bases. Is it a problem? I don't know, I have to ask an economist. But from a pure legal viewpoint, this rule is an expression of the nexus of taxing rights, which is expressed in physical and tangible limits. So far, so good. States do have control of their frontiers, and they decide whatever they want in terms of deciding where to tax people. So sovereignty is fully respected. But can we do something about this residence taxation if it doesn't work? Because obviously we have problems of vanishing tax bases with gig economy, with nomads, with digital work, with telework, whatever. And the question is, first, can we address this altogether under the EU banner? And I would say yes, because we have a problem that residence has become a traded commodity, and it's extremely easy for a few wealthy individuals to start unbundling the tax sovereignty packages and choose wherever they want to get taxed. And you're going to tell me, what's the problem? Yeah, well, the law is not updated. Obviously, we need to update our sources of law in order to find probably alternative tax bases. Another answer, academics, we never take position. We say maybe yes or maybe no, so I leave it up to politicians to take the decision. It's very convenient. But no, the EU has no mandate to rule on the allocation of taxing rights, which is, as I said, hard law decided between member states. And therefore, it's not a good idea to let the EU take over in that direction. And basically, what we've seen in the field of corporate income tax is that compliance and over-regulation have taken the place instead of promoting sounder values. That runs counter to the internal market point.
Okay. It's a bit more than 2 minutes, but very interesting. And yes, I'm very flexible, and I hope it generates also a bit of debate, what you said. Mr. Lande, please.
Okay, I'll try to be brief then. And I'll start with a truism. But why do we care, actually? Why are we here? No, but really, personal income taxation, it turns out that a developed economy cannot exist without a modern tax system, and at the core of any modern tax system is personal income taxation. This is the way we levy tax revenues mostly in developed societies, and we could not be able to fund central public goods for the functioning of our economies, such as education, healthcare, the welfare state, without well-functioning personal income taxes. Actually, historically, if you look, it's very interesting to see that this is at the moment that there is the creation of a broad-based, comprehensive personal income tax system, usually with withholding, that you see that massive increase in the tax take as a fraction of GDP in countries that it correlates with the funding of central public goods and actually a big boost in development. So we care. We care, but the way the whole panel is framed is also trying to make us worried. We talked about mega trends that are going to change completely the way personal income taxation works, and maybe the whole personal income tax system is going to disappear, or we need absolutely to change. So how worried should we be? Should we be anxious? Yeah, we should always be anxious. It keeps us young, right? It's not a bad thing. That being said, I think one of the main danger is to fail to identify the core issues by being obsessed with these mega trends. Let me take an example. We're talking about one of these mega trends as being the total change in nature of work. Okay, gig working, digitalisation. Is it that much of an issue? For instance, we're always saying, look, digitization brings a total change in the nature of work and labor with gig workers and stuff like that. When you actually look at the numbers, the fraction of self-employed has declined tremendously over the past 30 years. There is a tiny bit of an increase in gig working, but it's I think, probably a second-order issue. We are talking about, digitalization and the way it's going to change the way we can locate labor as well. Again, teleworking, the COVID crisis, big thing. That being said, I think it's totally tiny and negligible compared to posted workers, which has been an issue for the past 20 years, and that is, just in terms of numbers, a much more first-order issue than these trends. So I think we should be kind of cautious to make the effort of re-identifying what's really causing an issue to the future of personal income taxation. I'll finish with one of these trends, which is we're talking about a change in the labor share with an increase in the overall capital income share in our economies, and that pushes for some kind of reallocation of personal income taxes between capital and labor. Yeah, it's true. There is a big economic trend with a decline in the labor share. That being said, the main problem here is not really the economic trend, it's the political megatrend. And what was the political megatrend? Over the past 30 years, we've decided that we wanted to create a divergence between the tax base of labor income and capital income in the personal income tax system, with essentially flat rates for capital income. Well, it turns out that we are kind of realizing today all the issues that are created by this divergence. And yeah, the main issue there is much more the dealing with that political megatrend that has created this massive divergence than the economic trend towards a fall in the labor share. I'll stop there.
So you bring us back to planet Earth with your remarks, but let me try to just to kick off the discussion, bring all this a bit together and combine the different elements that were brought to the floor by you. If we look at and I think this is a real problem, if we look at the European economy today, we have labor shortages. There are clear labor shortages. We have an unprecedented low unemployment. It's very good news, below 6%. Never seen rate that is so low, and that's the average for the whole of the EU, where you have peaks still in certain member states of 12%. I mean, many member states are also well below 6 or even 4 or 3 or 0. And then at the same time, we see that the vacancy rates in the companies have never been so high, over 3%. And companies are constantly complaining they don't find the people anymore. At the same time, we know also from the figures, and these are real figures, that there are still a large group of Europeans who are not working, who are in the age between 20 and 64. That's how Eurostat captures the numbers between 20 and 64 years. We have still about, in the best of world, more than 20% of the people who are not working. And there is, then my question is, do you think that how to activate those people, which I think is necessary, because we need the labor force, not least to do these important transitions that we talked about, and also to have, I think, a long-term sustainable basis to keep our social welfare states and the pensions and the social contributions in good shape. So is there anything we can do there to make it, to what extent is maybe the tax, the personal income tax, a part of the problem that needs to be solved to make it more attractive for people to work? Who would like to start? Yeah, okay.
Economist in the back is going to start. Okay, sorry, I'm going to need to start with, again, the figures and understanding what's going on here. If you look at employment rate differences that are important across European countries, where do they stem from? First, female employment rates, very different, and most of them are, well, actually, all of them are explained by differences in what we call the child penalties, okay, which is the effect on employment rate of women relative to men of the arrival of kids, okay? So clearly it means that there is a big issue. If we want to activate employment, we need to think about the child penalties and why in some countries they are very large and in some others they are less important. In that respect, can the income tax system play a role? Somehow we know that family-based income taxation can create disincentive to work for the second earner. It turns out, though, that the work we've done on child penalties doesn't suggest that this is the main reason, the main driver. There are many other things, and in particular, every public good that is going to be a good complement to female labor supply, so typically child care, that type of stuff, okay? So that's one. The second area where you see a lot of variation that, kind of correlates with this variation in employment rates is what happens at the very beginning and at the very end of your life cycle. So typically, the age at which you retire is a big explainer of the differences in employment rate across European countries, and what happens in terms of the employment rates of the youngsters, okay? Again, can the income tax system be part of the response? Yeah, but probably we see for what happens for retirement, it's much more about the incentives that are created by the retirement pension system, okay? For what happens at the early stage of the life cycle, yes, I think here there is a key issue, which is how do we optimize our transfer system for the youngsters so that they are, in some sense, insured against the difficulty of entering the labor force without creating too many disincentives to work. And here, clearly, there is a lot of work to be done. We're all experiencing with some form of, the EATC, the Earned Income Tax Credit, which is the US version of creating a subsidy to work. But, again, a lot of countries that have put these programs in place, such as France with the RSA, have not really evaluated the impact that it's had, and I think there is a lot that can be done in order to improve this type of devices.
Anybody else? How to activate more people into the labor market?
Short comment, maybe,
Yes.
on these two very interesting points. Sweden has a retirement age of 67, and it will go on increasing. The retirement system is indexed on how much the state gets into its pocket. And it ends up to be like that it's such a low retirement income you get that you keep on working. So incentivizing work doesn't need to go through the tax system. It could go through other measures. It's a bit like the panel we were before, where tax could be used to have some consequences. No, but more direct measures are probably more efficient, I would say. I'm not the economist, so I couldn't say more about that. But regarding the couple family issue, Sweden as well has a split system where everybody is responsible for its own tax return. And it seems to be, from the figures I've read, that the equality, the gender equality in labor representation is high as well. And what does it have to do with tax? Well, all of it, because certainly the labor work of the woman that stays at home and takes care of the kids is not subsidized by the tax system anymore. So there's a lot written about this, I'm sure. And Sweden is kind of an interesting example to that. But childbirth, we're talking about this, paternity leave in Sweden. You want to get 100%, well, 90% of your salary for 1 year maternity leave, yeah, then both spouses need to take half time of the paternity, the leave, which means that you're on the street and you see strollers with males and babies, and it's okay, and nobody loses their job just because they're going to get paternity leave of 6 months.
Mr. KATAINEN, yeah.
Just short comments. I think in Finland we have more or less the same pension system as they have in Sweden, so the pension or retirement age depends on the life expectancy, and it's been going up and up all the time, so the retirement age has been risen, and that's widely accepted. The second point is that there has been a lot of talk, and it seems to function, that if you incentivize pensioners to work, they are very willing to take some work. So it increases the life. It's part of their lifestyle to work 2 days a week, 3 days a week, 1 week per month, 2 weeks per month. So when they have a freedom to choose, they are willing to work. And that is quite a significant group of people who could provide some help for our labor shortages. The third and final point is I combine the family benefits. They are sometimes more important than taxation, but we have countries where there are family taxation, which I believe Markus would never agree with me. It is quite unfortunate from labor point of view, because it creates contrary incentives to stay at home.
Sure, you would like to respond to that.
No, I will not take up this bone you threw at my side. Honestly, coming from a member state where the pension age is a very crucial step in your life, because you are not allowed to work anymore. And that's a pity. Yeah, and you can do a little bit, the small income solution, for example, but if you are over a certain limit, it reduces automatically the pension as well, and so it's very complicated for elder people to do some things. On the other hand, and we've been with Econ committee in springtime in Japan, and took some pictures of the labor market as well, as their demography is even a higher problem than we have it. So you can have a little look in the future how to organize work. They have more attractive models for elderly people as well. That does not mean that you have to do the hard work. In Germany, we always speak about the man on the roof who is making the roof ready, which is, of course, hard work. That is nothing to be done with 65 or 67, 68. But there are a lot of possibilities for other people, or even for those people to do some other things in taking care of properties or things like that. So there are a lot of possibilities we are not using at the moment. I think that is very important. On the other hand, I think on this German word Ehegatten splitting, how to split that, where I always get the complaint that the German system is not very attractive for double incomes. I think the main problem in Germany is not the Ehegatten splitting, as I have children here in Brussels, where we had for our children more possibilities than one to bring them to a crash, and now École maternelle and École. And in Germany you have no chance, not even to get one place in a crash, and not to decide whether it's this or that we will take at the end of the day. And that is something which creates more incentives for both parts of a family to work than the tax system, and therefore we should be aware that the childcare is very, very important. And as I have this comparison between Germany and Belgium, for example, if we would have the possibilities in Germany as we have in Belgium, I think more women would be able to work whatever the tax system says. But if you have no alternative, because no one can help you in the childcare as no services are available, then you have to reorganize it in the family with both options. A man can do the paternal leave as well, paternal leave. It's not forbidden in Germany, but it's not equalized as in Sweden, but they can do it in the share as they think it is appropriate. I think that is okay, but if you don't have the infrastructure on the childcare system, it will not be addressed by other taxation system. That's, taxation can help or cannot help, but firstly you have to answer the fundamental question, where is, for example, childcare done? And in the beginning of the life cycle, I think, therefore, the skills, how to educate young people and how to prepare them for the labor market is more important than the tax system as well. So I think with vocational training, which is very famous in Germany, we have the lowest youth unemployment rates, because I think we have a very good system to prepare young people for the labor market. But even there is always a possibility to improve. But I think that are the most important things to be done. A tax system can only give some added value, but not be the main course addressing these problems.
Thank you.
So thank you. I would follow up. In Portugal, we also have the splitting tax system, and the consequences are a bit different. On one hand, no childcare, not enough, but still women work because wages are low, and therefore the consequence is a low birth rate. So this is to be in agreement with my panel colleagues that taxes or the tax system does not solve every issue, and probably not the main topic here in this respect. And then if we, just moving a bit on, if we think about the future and not the current situation, taking into account the economy and its evolution, we'll have a lot of displacement effects, taking into account that unqualified jobs are giving place to qualified jobs. So that's the challenge on how to stimulate all kinds of jobs. And then we would have the possibility of taxing capital income, so to liaise also with our economists in the panel, how to come back to taxation of capital income. Now we have exchange of information, and of course automatized work, how to tax this automation. And finally, just as an example that the Nordic colleagues could develop better than myself, when we look at the Danish system, it enhances consumption and savings by providing high mobility between jobs, income safety net for the unemployment, active labor market policy. Perhaps we ought to think about this in the other member states. And we are all thinking about member states' policies and not harmonization here, I guess.
Yes. Okay, after this first round, I'd like to now offer you in the audience the opportunity to ask questions and take up one or the other point that was made by the panelists. Any reactions or questions? Gerasimos, go ahead.
Just to bring a question is that at the moment 50% of our total government revenue in Europe is on personal income taxation. That is what, should it go up or down? Then of course the composition of this, what happens with men, women or redistribution is one aspect. But I think looking at the tax mix of tomorrow, I think the important thing is what is the role of personal income taxation in the total tax mix. The Commission policy in the different semester recommendations, etc., is try to put labor taxation down to stimulate employment. For 10 years we have been doing that, but now we have full employment. So I think I would like to ask the speakers, you know, on this big question, you know, should labor taxation as who had about 50% of total tax mix go up or down?
Down? Yeah, please. Take.
So I think it's already much more than 50% because the way we finance out of our welfare state is through social contribution that, again, I'd be surprised. But yeah, in any case, the thing is, yeah, income and a broad-based comprehensive income tax, be it a purely defined income tax or social contribution, is at the heart of the tax basis that we can use to fund big public goods. So I don't, you know, I expect it to stay very large. The issue of what to do with capital taxation, again, I think, yeah, clearly, if you look at what has happened over the past 25, 30 years, there has been a decline in the contribution of capital income taxes to the overall tax mix. And yeah, it seems relatively kind of coherent to believe that that share must now come back up. And also because there has been at the same time an increase in the capital income share. So yeah, I'll say this, it's obvious that there is something that needs to be done. But again, to me, it's not so much, oh, are we going to decline the taxation of labor and put it on capital? There's going to be something like this that's going to happen for sure, or that needs to happen. But it's also the overall progressivity of the tax system. Like, who essentially do we want to incentivize to work? And that is even more important in some sense than just like the aggregate tax on labor income. Is, you know, what kind of labor income do we want to essentially subsidize by having a decrease in the taxes, and where do we want to kind of tilt the progressivity? And on this, I hope that we're also going to have a proper conversation on, you know, the fundamental question when it comes to labor versus capital taxation is much more about the integration of the entire tax system for getting progressivity at the very, very top of the income distribution. I think this is the main issue where, again, European coordination is going to be needed. And yeah, I hope we're going to have also a little bit of time to talk about this, because there are a lot of important issues that need to be raised there.
Yeah.
Yes, we seem to agree this time on that one. And what is the European Union's role in that, actually? What is the target here? We voters, we pay our taxes, and we pay our taxes where we have our residence. Sorry, I'm coming always back to that. And we have our residence because we have our economic ties with one sovereignty. And if you want to change the model, increase the taxes, get people more involved, then you have to show them what they get for it. And how do they get things? Well, they get things because they are living there and contributing to the country. Well, of course, there are people who cheat. There are people who not even cheat, but at least use the system because it's plenty of holes in the system. But there are plenty of other peoples like me who've got double life in double countries and get double exposed to double tax all the time. So I see a question here which is about all of this as well. What can we do to make things better? We need more tax bases, but maybe not higher tax rates. We need more tax bases. We need to make people have the lust to contribute and stop the hindrances to start with. Get mobile, get an integrated market, get a standard, a minimum standard of progressivity should stop at that level. Then people will stop choosing where they want to be taxed. If it looks around the same, and if you stop attracting residents because they're super wealthy, then maybe suddenly it's going to be a fair level playing field. And isn't it what the EU is all about?
Mr. Ferber.
If you allow, I would directly jump in because I think that is very important. There's one, you don't see it, but we have some question on the screen. You see it as well. Okay, sorry. Especially the last one on the digital nomads. I think there we really need a level playing field, as we have already some member states who are attracting that. And that is something we have to sort out, which does not mean that we become responsible for income tax, but we have to create a fair playing level field, that these things do not create a change of behavior on those areas where it is not very important where you really stay, where you live, in comparison to where you work or where the money comes from for your job. But the other thing I want to mention as well is, as I did a study on the middle class, and one of the results was, and the taxation of them, and one of the results was that especially for lower incomes, it's not attractive to earn more, because on the one hand, social aid goes down and taxation starts. And so there's really a minus for those who come in better paid jobs at one stage, and that is something where taxation has to play a role as well to make it more attractive to work and to leave social aid systems than to make it unattractive to work and to have a combination of a little bit of work plus social aid, which is more attractive than more income and less in the pocket. And therefore, that's why I said very clearly to the initial question, lower it down to make it more attractive to work, because you have more in your pocket than to wait for social aid.
Okay, thank you. So I would agree that labor tax should not be increased. If it goes up, it would increase non-domiciled regimes, these beneficial regimes for nomads and whatever. So it's better to have a larger tax base with less progressivity in the middle classes, let's say, and then progressivity at the very top. In principle, it's appealing, but we would need to be careful with what we could call tax exile. So it could lead to the richer to go away from the EU. So that's a very high risk.
Mr. KATAINEN, you want to jump in on this, or?
Just, I mean, when there were some words on the EU taxation, or whether we should pay directly some taxes for EU's created public goods. So this is a very technical point which I'm going to start now, but it's about tax collection, because there are huge differences between the countries on the efficiency of tax collections, and as far as this is the case, then it might be quite unacceptable to propose something like this. But Portugal is one of the good examples of the countries which have created very, or just recently or over the years, over the past years have changed the tax collection system to become very, very efficient, and it's doable. But quite often we are stuck to our national cultures and ways and habits, and are not ready to see that maybe there are some good examples to make the taxation more fair by doing it more efficient, so that there is no leeway or there's no way for tax avoidance or aggressive tax planning, so that the people could trust that I pay my fair share, and so does he or she who has bigger income.
You brought in the notion of citizenship taxation, Mrs. DOURADO. Could you maybe elaborate a bit how that would work? Because you seem to present it as a solution to many of the cross-border issues, which I think are very real. Huh? And if you speak to Mr. Letta, came to see us the other day, and he was also very interested in the real obstacles to the single market. Huh? So of course we have a single market. It's legally it exists. But when you actually try to use your rights, it turns out to be quite complicated. I can tell you, the moment you cross the border, it is really difficult to exercise those rights. And I think taxation, and also entitlement to social security are really parts of those puzzle. But so maybe.
Yeah, thank you. It was more of a provocation, and there's also a question by my colleague Rita Pires from the Nova University in Lisbon. About that. So my inspiration is, of course, the US tax system. It's very disputed whether the EU tax system is the correct one, because we have to justify citizenship taxation and its legitimacy. In other words, is there exchange of benefits between a state and its citizens if the citizens have resided abroad for many, many years? So how legitimate is it? But of course, within the EU, if we thought about this possibility, it would work if there was coordination, if, for example, there was a recommendation and some states started introducing it, and then there would be all of a sudden this type of taxation. The advantage is that it would prevent abuse and from the residency viewpoint. So it could prevent that abuse. But to be serious, I think that the best way is for us in the EU to start really applying the prohibition of abuse also in personal income tax, because we want to foster the internal market. So we need to be consistent. We want to foster mobility of persons. And if it's a true mobility, then it's internal market friendly. If it's false, if it's artificial, then it should act. And I think that, at least in some countries, it's not being taken seriously. So we should check whether it's a real resident or not. And we should start with that.
Any more questions from yes, please, the lady here. We have a mic?
Still had a, okay. I had a
Okay. Oh, then you have the priority, yes. Okay.
No, just would like to come back on the cross-border workers. Effectively, it's a huge issue, and if we're speaking about the future of taxation, sorry, the taxation of employees. Sorry, the taxation. I would like to come back on the cross-border workers issue and the taxation of employment, and it's good. Because of COVID and the digitalisation, effectively, a lot changed. But our international tax rules with regard to employment didn't change until now. And it's an issue, I think we need to face it. It's the fact that the condition of the physical presence for an employee to be in a certain state to be taxed, is this up to date? I don't think so. So we need to find a solution. And today, a lot of employees and employers are faced with problems, with double taxations, with a lot of issues, with a lot of administration issues, payroll issues, etc., etc. So I think, and that's the question, how can we see it? And speaking also with, it's true, the harmonization, also with Social Security is an issue, and for Social Security, they reached an agreement very recently on an EU level, so that for 49% you can stay work in your home residence state without any issue for your employer. it would be great now to have an alignment between taxes and social security on employment. But I'd like to hear from the panel.
Who would like to
Thank
take
you.
that point up? It's true that in social security in the European Union, even though that is also a purely national prerogative, we are much more advanced in harmonizing the rules than in taxation. And it's true that the rules were changed quite recently in a very progressive manner, because you can now stay half of your time in your country where you live while working in another one without any impact on the contribution of social security. So that is quite important. And now you have a disbalance there.
And why
Mr.
was
Ferber.
it possible? Very easy to answer. The one thing is qualified majority in the council, the other is anonymous and not even allowed. Yeah, direct taxation is not covered by the treaties. So firstly we need a treaty change, what we have for social security, for example, and we can vote, or the council can vote with qualified majority, parliament is involved 100%, and then it goes. But in taxation we are still in the age of Mr. Flintstone.
Yes. You agree, Mr. Geer? You seem to be less excited about digitalization and teleworking. And
No, but I want to stress again that point that we should really care about what's first order. And we have a lot of cross-border workers, but in terms of flows, they represent 10 times fewer flows than posted workers. So if we are thinking about the disconnect between where labor is taking place and the taxes that apply to it, or social contribution for that matter, yes, posted worker is a much more first-order issue that we want to address than cross-border flows of workers. Again, on this, it's surprising how little there is of evidence, debate, and suggestions. Even though we know now, thanks to the work of, for instance, people like Mathilde Munoz, who's done amazing work on this, thanks to actual data from the European Union on posted workers, that yeah, the effect of posting is actually very large and negative on the receiving local labor markets, while the effects in terms of diffusing in the sending labor markets and in terms of integrating our labor market, which again was the initial idea behind posted worker, that we would get some integration of our labor markets that is so key to make sure that we're not, facing asymmetric labor market shocks. And that, again, the evidence is showing that on sending labor markets, there is relatively little effect of integrating these labor markets to the rest of the union. So, yeah.
So you say mobility is hopeless? Is it what you say? What you're saying? You're saying that when an employer is sending somebody else, some of the employees abroad, the spillover effects are non-existent. Is it what you say? I try to decipher.
There are negative spillover effects on the receiving country. Okay, so typically low-skilled service workers in France are going to be negatively affected by posted worker being sent to France to do service jobs. Now, there is, of course, a gain for the sending countries, but the gains to the sending countries are essentially captured just by the workers without any diffusion to the rest of the wage ladder in the sending country. So that doesn't contribute at all to some form of convergence of real wage rates across the European Union.
Okay, yeah, I think on the figures, I mean, it's true that labor mobility inside the EU is actually going down. We had always something like 18 million EU citizens who were living in another country than they came from. This has now gone down to approximately 13 million, and also there's a big effect of Brexit. And it's true that the only mobility that goes up is the posting, because there we have now 3.6 million approximately per year cross-border workers. So people commuting every day, it's 350,000 people. So there you are. I think on the figures you're absolutely right. But the question is much more, what is the trend? I mean, shouldn't we prepare for further digitalization in that regard, and that it's bound to happen? Not to mention the digital nomads, which is also, I think, something which we are just there's nothing for those. It's just all, you wonder whether they pay any taxes at all at the end of the day. But okay, I think we have probably exploited our time there. I would really like to give you the floor, if you have a microphone. The lady there.
Thank you. I work at the European Parliament for the Socialist and Democrat, and I just wanted to maybe move away from the labor taxation question to refocus on the other side of the personal income tax issue, which is also the taxation of capital. And as you mentioned in your intervention, we've seen differentiation in the trend, still with progressive rates on labor income tax, but flat rates on capital tax. In some countries, we know, for example, capital gains are not taxed at all in the EU, and we tend to believe that capital is more mobile even than workers. And so my question is, do you feel there is some issue to be dealt with from the European level on capital taxation? Thank you.
So thank you for the question. If we rely on exchange of information, I would say that there is more leeway currently to tax capital income than 10 years or 20 years ago. What would be the effects? It depends on how exactly it will be taxed. But in my personal opinion, from a perspective of justice and redistribution and incentivizing labor, I think it will be a way, maybe the way, taking into account automation also. And
yeah, it's true that the capital goes cross-border easier than people. That's true. The only angle I would like to raise currently is that I'm mirroring this topic to the megatrend I mentioned, mainly the green transition, because we need more capital, accumulated capital, that we can expect more private investment for green transition. Because quite often in political environment, when we are talking about investment needs, we concentrate on taxpayers' money. And from my perspective, it's we certainly need public subsidies for certain investments, but the less the better, because it would be better if the market would take care of our green transition and not taxpayers. So that's why I would like to look at this thing too, because yeah, well, we can always talk and discuss whether the capital gains tax is in right level at the moment comparing the personal income tax, but I would be a little bit cautious not to destroy the good trend of private investment for green transition.
Mr. Ferber has to leave, as he told me in advance, so you are obviously excused. Thank you very much for your participation in the panel. But we still have 10-15 minutes to go. Please, yes.
And I'd like to add a few things on this. Thanks for asking this question. I think it's very important that we also care about what happens at the very top of the income distribution, and there the issue of what is labor income and what is capital income, and actually the issue of what is income becomes really complicated and calls for having a much broader view that includes the entire tax system, not just the personal income tax. Why? Well, because again, what are the effective taxes that are paid by people that have very high level of income and wealth? It's going to be not only the personal income tax that they are paying on the income that they realize, but it's also going to be the taxes that they pay through corporate income taxes on the profits of the business that they have. It's going to be the taxes that they pay on the stock of wealth that they have, and so on and so forth. And I think what's really important to realize is that we're talking a lot about we should think about this at the European level because there are so many mobility issues that create this difficulty of having progressivity. I think what has happened over the past 20 years is purely of our own making. Actually, if the progressivity has eroded at the very top, it's because on any single aspect of the tax system, there has been a decline in the taxes that were paid by these extremely wealthy individuals. First, on the personal income tax, because the overall progressivity of the income tax has decreased everywhere, the top tax rate has been declined, and also because we have created basically flat rates on capital income that has created a lot of labor to capital income tax shifting. There has been a decline in the wealth taxes everywhere. Wealth taxes have been either abolished or have declined quite a lot. And there has been also a decline in effective tax rate of corporate income taxes. So along all these margins, there has been a decline in the effective tax rate, and that explains a lot the lack of progress that we're seeing. But again, it's mostly of our own making. It's political decision. It's not that, oh, there has been an increase in mobility of capital that has, made it more difficult to tax that tax base. No, it's just because we've decided. And on that front, I think it's really important to realize that, yeah, it's true that this is a mobile tax base and that, yeah, it might be responsive. But the very interesting thing that we're learning from academics who work on these issues, and I've worked also a little bit on these issues, is that actually, if you make the effort of going into the data and looking at just how elastic, how responsive these mobility decisions, those location decisions of very wealthy individuals, or the location decision of investments, how responsive they are to the tax system, yes, it is responsive, but much less than what we think. Just to give you an example, in Sweden, for instance, a country that I know well and on which I've worked quite a lot, when the wealth tax was abolished in 2007, the entire rationale was we need to do this because the out-migration of our wealthy entrepreneurs, business leaders, is just creating a bleeding and so on and so forth. You look at the data first, actually, the net migration rate was positive at the top of the wealth distribution before the abolition of the wealth tax, first. Second, the overall flow rates we're talking about are minuscule. Okay, we're talking about 1/10 of a percentage point of the entire stock of wealthy individuals. The wealth tax is abolished. Do we see a response in the flow rates? Yes, we do. So clearly there is a response of location decision, and it's actually quite massive, but on tiny flows again. So that the overall effect that you can expect in terms of entrepreneurship, business activity, and so on and so forth, of eradicating the wealth tax is actually small. So again, it's not to say that we shouldn't care about entrepreneurs, about investment. Of course, we should make sure that our tax systems are designed to foster investment, entrepreneurship, innovation. I'm just saying that we should be extremely careful of not just abiding broadly to a general discourse that has not been tested carefully in the data.
Well, listening to you, it's quite disappointing that even though the Commission has been proposing tax shifts for 10 years, nothing seems to happen. It seems to be getting worse. But even inside member states, the debate is not actually going at all in the direction that everybody who has the time to think about these issues would conclude we need to go to. So there's actually quite a depressing conclusion, if that is true. And how can we change that? How can we mobilize the discussions in the member state that the tax shift does happen and that we do member states do devise their systems in the way that we think is necessary for the green transition, to deal with aging. Again, aging, I mean, I've been studying a bit on the figures. 1 million people less every year in the European Union in the age bracket 2064. Every year, 1 million less. That's the reality we're facing. So, I mean, this is also, that was a good question. I think, should we maybe start taxing the pensioners more? I suppose in some member states they are being taxed, but I don't know whether you would like to comment to that or...
I'm shocked about this 1 million. It's, I mean, I thought that Russian is worse, but actually it's on the contrary. Actually, by the way, in Russia, it was before the war. They were losing like 100,000 per year of working age population, and there are reasons now. Of course, the number much bigger, but yeah. So this is much more than the taxation issue. we need more migration to this continent. We need to look at the best practices, how to help people to get a new life in our continent, and make sure that migrants have a good life in Europe. So everything what we have been talking here can be successful only if the number of people is sufficient, because we cannot afford to run this welfare society which we have got used to in diminishing population. So this is the key issue.
Any questions? Yes. See 2 hands, 3 even. Good. Microphone. For the, I think the mister there in the middle was the first. There. No. No. Good to see. Yeah.
My name is Srinath. Hello. Yes. Yeah. I'm from the Netherlands, though I have Indian origins. I have 2 suggestions here to the panelists. Probably you can take it. And one of them is also, all of us sitting in this room, in the name of tax planning, let us agree that we avoid paying state taxes. The reason, whatever be the reason, and what I felt in last 30 years, I have been studying taxes, budgets of various countries. The word tax itself is, it's like imposing on people. So my recommendation is change the word tax to something as contribution or social contribution or something like that. That is first recommendation. And second is 99% of the employees all over the world, they pay taxes. Okay. Those who do not pay are normally the corporates or the individual, we call it private entrepreneurs or individual small scale entrepreneurs. They try to plan their tax so that they reduce the payment of the tax. What I recommend is reduce the personal income tax rate per se. Change it to quite less. Make it a social contribution or something like that. Then you will have more people contributing to the state.
Okay.
That's my suggestion.
Thank you.
I'm Fayaz Darshan from SKF, so Swedish company. So we are looking very much at what you just said it on the tax shift. Innovation is one of the things where circular economy will have a big impact. But this is also investment. But also if we'll see that also the labor is reducing quite dramatically. But reducing the tax will surely allow also the companies to invest. So we are having a problem with the capital to invest in the circular economy, in the services, refurbishment. So I think it's helping also in a capital point of view if we have a labor tax reduced. So just simple.
Yeah. No? No reaction from the panel on this? No? Yeah. The lady in the front with the red jacket.
From Lithuania. And it's very good suggestion about to take to change tax name. It's not tax name, but something that I think I fully support for that. But I have question: do you see any the difference of tax burden for employees and self-employment, and in digital world as well from business perspective and as well from taxation and from tax revenues? Thank you.
Please.
Well, let me tell you that from a pure legal perspective, this is not a simple question, and it's extremely nationally regulated. There is nothing in the EU that tries and trends to harmonize the notion of what is a dependent or independent service provider, employee, the relationship of contract. And you know better than anyone that there are 27 regulations out there with different. So, yes, the ideal would be to neutralize the difference between self-employment and employment. And Anna and I, we were talking about this morning and said, one good thing would be that, for instance, if self-employed can deduct the costs of their self-employment from their tax bill, which happens in some jurisdiction, then why does the employee can't do that? No, because it's the employer that takes over the weight of the economic weight of the costs for this work performed. And from a pure economic viewpoint, if you compare both employment and self-employment, then suddenly it's fair. Someone pays for the costs of the work, either the employee or either the employer or the self-employed. But what is the problem? Do you think the self-employed are better off? I mean, they probably, depending on the system they live in, will have a limited access to retirement guarantees or to social security. They have to pay it for themselves. Well, I would say it really is difficult to give a rule of thumb that would be available for all countries in the world, really. But the idea is to not having the tax an incentive to work in a shape or in another one, but rather, as Adam Smith said, have it completely neutralized. But I don't know what the economist says about this.
I'd say something rather obvious, which is from the point of view of economic incentives and from the point of view of the tax system, the main distortion between the employment and the self-employment margin is basically third-party reporting. Okay, so when you're an employee, modern tax systems are based on withholding income taxes and therefore having third-party reported information on your income that leaves very, very little space for avoidance, evasion, cheating. Okay. It's very hard to create the same system of third-party reporting for a lot of the services that are performed by the self-employed, and that creates, therefore, that distortion in the tax treatment of self-employed versus employed individuals. How much can technology address this distortion? A bit. Again, going back to the example of Portugal, the idea that now with a very strong enforcement of VAT through these incentives of people to ask for the bills that reduce the ability of the self-employed to evade part of the services that they provide, that type of stuff. Maybe, but again, I think the main difficulty when it comes to the self-employment margin is the fact that, it's very hard to have the same level of enforcement on these two types of income.
Yeah.
Okay, so on this neutrality between employees and self-employment, one obvious path is to increase audits to check whether it's a true self-employee or whether it's an employee. And I know that there are member states that are increasing those audits and are being very restrictive. For example, forbidding that certain types of activities can be classified as business income. If it's a personalized, very personal activity, then it has to be an employee, and this has repercussions in the tax burden that will increase. If I can go back to binding taxes, and I would say the opposite. What we discuss now in academia is that taxes are not binding any longer for those who have more ability to pay, because they choose where not to pay taxes or where to pay lower taxes. And that's why we need international coordination and harmonization.
Okay, and I think with that we should conclude this panel. I find it quite hard to come to any conclusions, to be honest. But we have had a very interesting debate. I would nevertheless like to retain that we all agree that a tax shift is necessary. The panel agrees the tax shift is necessary, and that we need to work on this, not only in the Commission or in the EU, but also nationally, to push for that much more sustainable solution of our taxation system. I think also be prepared for the big mega trends that will hit us. Eventually, aging, but also digitalization. Third point I would retain is to say the internal market. It exists, it's celebrating its 30th anniversary, but does it really exist? If you try to move a company from one country to another, the differences here on mobility of people between the social security and the tax system is, I think, also an interesting point to take forward. So I think we have some interesting points here to take forward, and I would like to really thank the panelists, the audience and the panelists for your interesting contributions, and I think they deserve a good applause.